Hey guys, Steve here from the turtlefollower.com with the strategy session for Monday, September 22nd. Hope you guys had a great weekend. Hope you were able to navigate the market today with some of the information we handed out in the weekend update and this morning's stock market outlook. If you didn't get a chance to watch the video from this morning, the stock market outlook, I highly recommend you do so. Basically, we pretty much nailed exactly what we thought was going to happen today. I didn't, of course, think that it was going to be the magnitude that it was, but we did discuss about an early week pullback leading to a better buy point and potentially a better bounce point. So that's basically what happened this morning. As you can see on the S&P futures, we reversed from Friday's high. Okay, this reversal bar on Friday right here. You can see what happened during the day was we ended up moving higher. We were up to almost 2015 on the S&P 500 futures, and only to close lower on the day. So this signal here signaled somewhat of a reversal. We talked about that in the stock market outlook, and sure enough, today we got that follow through. Took back basically most of the gains from last week, and right now we are sitting, if we were using this consolidation, we're sitting right at 1983, which was the bottom of this consolidation we had identified prior. Now we could very well come back to the backside of this downtrend line, bounce off of that, or the other thing that I'm looking at is this could be the start of a potential head and shoulders pattern. I mean, we'll obviously see how it plays out, but this would be your left shoulder, potentially your head here, and then if we came back up, bounce to like a 2000 level, and then sold off, then that could be your right shoulder, and that may lead us back down to this trend line. So for right now, I'd say cautious is the way to go, but I do think that this 50-day moving average should provide some significant support down here for at least a bounce higher, if not a move higher. And you could see again on the weekly chart, we're moving right into that weekly trend line. Okay, coming right back into this yellow line here. So I think everything is set up more for a pullback and a breakout, but we'll see what happens. So our positions today, unfortunately, today was not a good day. We only had 2 of the 10 positions up, and they were up minimally. The biggest one, 0.15%. So let's just go through them in order. Apple up 0.10. There was an article out this morning that with a price target of $130 for Apple, based on the sales of the iPhone. I think they sold over 10 million iPhones in the first weekend. So good to know in the back of your head, but nothing that you could really trade off of. So for right now, 97.90 is still going to be our stop. And you can see what's happening. We're essentially consolidating within this larger box here between 103 and 98. So let's see which one breaks first. My bet is that we eventually, considering that we did not pull back much today, if we can get a nice reversal in the next 2 or 3 days, that we break out over this 103 level, but we'll see what happens. ADM down 0.44%. Really just let this one work. Okay. We're using 49.12 as our stop. We were able to move that up over the weekend update. Next level that we could potentially use would be around $50. But for right now, we're well above the trend line. We're well above the 50-day moving average. So the best case scenario for ADM would be some sideways consolidation for, say, a month, and then another breakout higher. AMT almost triggered an exit today. You could see because we do use closing prices, we did speak about this on the weekend update that I said, based on the way this was moving up, and this almost looked like more of like a bear flag pattern than anything else, and then it broke down, that any further weakness that we could potentially definitely see a close below this 94.20 area that we're using. Sure enough, we closed right above it. We did move down through it during the day. So if you were using an actual stop order, you would have been stopped out today. We are currently still in the trade, but we're hanging out for dear life here. I would say any close below 94.20, call it 94, just to make it easy. That would cause us to exit the trade. But we had a nice trade if that's the case. All right, we entered down here at 90, and we made it to 94 Of course, it would have been nice to sell right up here at 100, but that usually doesn't happen. Disney, you could see we're still consolidating. We came back in much more of a sell-off today than we've had in the past. So let's see what happens now. If we can hold that 50-day moving average, hold that 88.70 area, which we're talking about potentially being our new support level, or if we break through that and come down and test 87.30. For right now, though, it looks like the trend lines are holding. The weekly trend line's holding, the 50 days holding. So again, just let this one work. Expedia, you can see how it's broken the downtrend. It broke the channel, right? And it's riding this downtrend line. So right now, we're using 82.50 as our stop level. Came very close to that today. We are trading below the 50-day moving average for the first time in about 4 months. So I would say that this is a critical area here. If we can't bounce and take over that downtrend line, I would say we're probably going to get stopped out in the next few days. But 82.50 is the stop on Expedia. Fidelity, kind of hanging on right to that 50-day moving average, stop right below. So let's see. I think at this one, let's take this drawing out. We're still obviously the trend line is still intact. All right. So it looks like at this point we're still getting higher highs, higher lows, but we would need to see that reverse shortly and break out over 57.30. And if not, I think 56.40 is definitely in play as a potential stop level. And if we do not break out, in the next couple days above 57.50, then I think that's probably the way we're going to head. General Dynamics, 121.37 is our stop. You can see the 50-day moving average is now above that level. All right, and we got a little bit of a pullback. We haven't had that in a while, but you could see here, if we're looking at it in a very short-term time frame here, you could see, higher low, higher high, higher low, higher high. So obviously the next one will be a higher low and then continue up. But I think this one is getting fairly steep in its trend. I think it does need to consolidate, allow that 50-day moving average to catch up. You could see here on the weekly chart that everything is kind of lining up where it potentially looks like this could be the top of the channel. So right now, I would say we potentially have a little more upside. Best case scenario is, for a longer term trade, that we move sideways and then break out again. H&R Block up 0.15%. This is a little telling for me. We've talked about how this potentially could be the start of a short position. If you did short on the break under 31.97, then you're not following my rules, because we do wait for closing prices, and this is typically what would happen to me when I was not using closing prices. I would say, oh, well, that's great, we're going to short on 32.97. I would short during the day and it would rally back right in my face, or vice versa. I would buy the breakout during the day and it would be sold into. So that's why we use closing prices. Right now 32 is our stop level. You can see again today's action. It did break down below 32, traded all the way to 31.85, and then turned around and actually closed higher on the day at 32.30. So this is why we use closing prices. For right now, we're still in the trade. This potentially could lead to a break over 32.50, a break over 32.75, which is the 50-day, and another test of this 34 area. That would be ideal. Let's see what's happened. Let's see what happens. On the 50-day, you can see we're bouncing right off of support, which was previous resistance. LUV. Okay, this one hasn't rested in a while. Now we have 2 big days, down days in a row. We haven't had that. Okay, there hasn't been those types of days in the past. What are we in this trade? A month and a half. All right, so this is something to take notice of. We talked about Friday's action being a bearish engulfing pattern where the bar engulfs the entire previous bar. Okay, that this one was green, and then sellers or buyers tried to take it higher. Sellers took it right back and closed at 34.50, And then today we had continuation to the downside. At this point, the accelerated uptrend that we've been in is now broken. Okay, we broke it. So now we've finally closed below that trend line. Let's see where we go from here. Right now, I want to move that stop to 3170, but we need to wait for that 50-day moving average to catch up. And again, we're doing it, everything methodical, everything systematic. If you want to be aggressive, definitely move that stop to lock in profits. If you're doing everything in accordance with the system that I'm putting out there, we're waiting for that 50-day moving average to catch up, and we're trying to catch the longer term trend of the stock. Whether this is the top or not, I have no idea. But for right now, all I know is we're in from 29.38, and that's where our stop is. So we're essentially break even on the trade. If we can get it up to 31.71, then we can lock in some profits. RSG down 0.38, and this one just continues to move sideways. All right, it has for the past month. It's been moving sideways. This is the exact kind of pattern I want to see from something like an ADM. I want to see more of something where it goes sideways, establishes a nice trading level, and then eventually breaks out higher for the next leg higher. For right now, we're using 38.11. I think the next potential stop level, depending on what happens, if we can get a breakout or not, and when it happens, if we can get that break over $40, then the next level is going to be 39 once the 50-day moving average is above that level. We have dividends coming up. Again, we've talked about it in the past, but I can't track the dividends. The paper trading software doesn't allow us to track that. So, that's another way. Even though we're basically in a sideways market or a sideways stock, we're still making money on the dividends. So that's one reason that we do trade dividends. And that's one reason that I really don't care. And I look for those consolidations because I know I'm still making passive money. For the longer term health of the stock and of the trend, I like to see these consolidations and I like to see the breakouts. And the dividends help me be patient with the stock, knowing that I'm still getting paid to wait. So as far as our watch list goes, we put this together over the weekend, and you can see only 4 of about, I would say, 20 stocks were positive. We'll go through those real quick. LEG, you can see here, tried to break out over that 35.50, failed. It was sold into, and this is what I was talking about, similar to H&R Block, but on the reverse. This would be something if you were trading it during the day. You probably would have bought it at somewhere around 35.79, especially the market was down, stock was up, everything's looking great, and sure enough, it was sold into, and now you're down on the day. That's why I wait for closing prices. It takes a lot of stress and a lot of aggravation out of the equation, and closing prices let me know that I'm okay and it's safe to enter. EMC up 0.51%. Again, another one tried to break out over 30, was sold into, closed right back in the middle of the range. MRK up a little bit, right back in the middle of the range. We're still waiting for that breakout over 61.20. And the last one, CenturyLink, bounced off of the trend line, 50-day moving average. Right now, it looks like it's putting in a higher low. I would say we're waiting for 41.50 as the potential trigger to get long this stock, and then you could potentially use 39.47 or 38.60 as your 2 stop levels, depending on how aggressive you want to be in the trade. So as you can see, they really didn't lend itself to too much as far as long positions, but we're going to have days like this. The fact is, at the end of the day, it sucks that we probably had most of our gains from the last week taken away, but it is what it is. It's part of the game. We have a plan going forward, and we're going to stick to that plan. That's the nice thing about having a system and having a plan. Is the fact is, I'm not panicking right now. I know exactly where I get out. I know exactly how much I'm risking, and unless there's the black swan events that happen, I'm perfectly comfortable with that risk. So, with everything going on, you got to look at it, in the right mindset. If you're freaking out right now that you're losing money, then you're trading too big. That's all I can tell you. Is you need to cut your positions in half or size them properly. And if you don't know how to do that, we're going to be launching those e-courses that's going to take you through every single step of putting a trade on and eventually exiting a trade. That'll be available for purchase, download, and email delivery come January. So, like I said, all I can tell you right now is if you're freaking out that we're down 20 points today and you lost, say, X percent of your portfolio, then you're trading too big. So size those positions right. Kind of follow me and we can go over all that stuff. But, have a plan in place, stick to it, and just let the stocks play out. You can't control them. They're going to do what they're going to do. You just have to make sure that you're not risking too much and not overexposed in too many areas. So with that said, have a great rest of the night. This week's going to be a little different. I will not be doing videos after Wednesday night. My wife surprised me for a little vacation getaway, so I will not be doing videos after Wednesday. There will be no weekend update, so I'll try and get as much information out earlier in the week as I can, but we'll kind of reconvene next week. But for right now, there will be 3 more videos coming out this week. So have a great rest of the night, guys. Follow me, Stock Twits, Twitter, Google+, subscribe to the YouTube channel, and subscribe to the nightly recap. This way you get all the future updates. And thanks for watching. All right, have a great rest of the night, guys. Bye.